Reserve Bank of India has hiked.
Meanwhile, COVID-19 infections and lockdowns in major global production hubs are likely to accentuate global supply chain bottlenecks while depressing growth. In fact, global growth projections have been revised downwards by up to 100 basis points for this calendar year. These dynamics pose upside risks to India's inflation trajectory set out in the MPC resolution of April. Further, the MPC noted that domestic economic activity is progressing broadly on the lines anticipated in April. Contact-intensive services are benefiting from pent-up demand, and investment activity is showing some signs of gaining traction. At the same time, the MPC judged that the inflation outlook warrants an appropriate and timely response through resolute and calibrated steps to ensure that second-round effects of supply-side shocks on the economy are contained and long-term inflation expectations are kept firmly anchored. In the MPC's view, monetary policy response at this juncture would help to preserve macro-financial stability amidst increasing volatility in financial markets. Accordingly, the MPC decided to increase the policy repo rate by 40 basis points, and it also decided to remain accommodative while focusing on withdrawal of accommodation to ensure that inflation remains within target going forward while supporting growth. Let me now elaborate further on the outlook for growth and inflation. I would now first like to focus on growth. In this high-voltage global environment, it is useful to take stock of domestic macroeconomic and financial conditions. The rebound in domestic economic activity that took hold with the ebbing of the Omicron wave is turning out to be increasingly broad-based. Private consumption is regaining traction on the back of recuperating contact-intensive services and rising discretionary spending. The forecast of a normal southwest monsoon in 2022 for the fourth successive year has brightened agricultural prospects, and this should support rural consumption. There are also signs of an incipient revival taking place in the investment cycle. This is reflected in high-frequency indicators like imports and production of capital goods, rising capacity utilization supported by conducive financial conditions, and stronger corporate sector balance sheets. Export growth has remained buoyant, while persisting high growth in non-oil, non-gold imports reflects a durable revival in domestic demand. Even as the drivers of domestic economic activity are getting stronger, they face headwinds from global spillovers in the form of protracted and intensifying geopolitical tensions, elevated commodity prices, COVID-19 related lockdowns or restrictions in some major economies, slowing external demand and tightening global financial conditions on the back of monetary policy normalization in advanced economies. These risks are evolving on the lines anticipated in April 2022 statement and appear to be lingering. Let me turn to inflation now. The sharp acceleration in headline CPI inflation in March 2022 to 7% was propelled in particular by food inflation due to the impact of adverse spillovers from unprecedented high global food prices. 9 out of the 12 food subgroups registered an increase in inflation in the month of March. High-frequency price indicators for April indicate the persistence of food price pressures. Simultaneously, the direct impact of increases in domestic pump prices of petroleum products beginning the second fortnight of March is feeding into core inflation prints and is expected to have intensified in April. Looking ahead, food inflation pressures are likely to continue. Food price indices of the Food and Agriculture Organization, that is FAO, and the World Bank touched historical highs in March and remain elevated. Spillovers from global wheat shortages are impacting domestic prices, even though domestic supply remains comfortable. Prices of edible oils may firm up further due to export restrictions by key producing countries and the loss of sunflower oil output due to the war.
Briefing
Elevated
specifically
feed
with
costs.
regard to the repo rate, and we'll be tracking the latest and the highlights from the press conference.